Mindcast, the Swiss startup podcast. Episode 19, Silicon Valley Venture Capital. Presented and produced by Swiss Minds. Supported by the Hightech Zentrum Aargau. Welcome to Mindcast. In today's episode, we're going to talk about venture capital. Our guest today is Alex Fries. He's partner of a VC company, Polytech Ecosystems. Alex, nice to have you here.
Thank you. Thank you for having me.
How did you come to the startup scene and especially venture capital?
Yeah, when I was younger, I went to Silicon Valley to do my master's, and I had the opportunity to work for a startup there. And I realized how much fun you have. And since I'm a risk taker, I really enjoy being there. So that was my first step into the world of startups. And then a few years later, after having co-founded a few startups, I decided to switch sides to the venture capital side and help mostly European startups going to Silicon Valley.
So venture capital, what is venture capital?
Well, that's a good question because, as you may know, venture capital supposedly invests in high-risk ventures. Unfortunately, we have a lot of venture capitalists that do not invest in high risk, and they like to invest in safer instruments. But if you take the words venture capitalist, it basically means that you're willing to take money and invest it in a startup, meaning in young people that have a great idea and take the risk and hopefully help them out to make this a big company. So it's an investment vehicle into very, very high-risk instruments or projects.
Mm-hmm. And you said you started out in venture capital in the US. We always hear that the venture capital scene in the US and in Switzerland is a little bit different since you know both of them. Can you elaborate a little bit the differences out of your experience?
Yes, it's very different, and mostly because of the cultural and personality differences. For example, in the US, venture capitalists really take a little bit more of risks. And the best example is really when a startup goes to a venture capitalist in the US. The first thing the venture capitalist will ask is, who is part of the team? Who is going to make this project a success, right? Because you're investing in people, you're not really investing in the idea as much. In Europe or Switzerland, when you come to a venture capitalist, the first thing he will ask you is, may I see the Excel sheet? Because I want to see how your projections will be, how much money you're going to make in 10 years or 5 years. And numbers in a startup means nothing, right? It's insignificant. So that's one of the major differences. The other differences are, in the US, they like to give you a lot of money as soon as possible so you can grow fast. And conquer the world, so to say. Here, they're more carefully. They give you very little money to make it to the next step. So a combination of both is really ideal. I would say those are the two main differences on both sides.
If a startup comes to you, generally they come and say, hey, I have this cool idea. Can you give me some money? Now, as I understood, in the US, they will look at the team. In Switzerland, they would look at the Excel sheet. So in Switzerland, of course, if he doesn't have an Excel sheet, he only has an idea, he will not get any money. Will he get money in the US?
Yes, it doesn't happen often, but if you are a so-called serial entrepreneur, or you have done it before with success or not, as you know, in the US, failure means something good, basically. It means that you learn from the past, so you're going to do it again and better. But there are times where just an idea comes to you, maybe on a PowerPoint, and if you're known, if you've done it before, or you're one of these guys that, with 16 you created a computer or something, so one of these whiz kids, many times the investors will give you money. The problem is, of course, the valuation and how much of the company do you take away, right? Because you have nothing. So if I give you $1 million, basically, I should own 100%, but obviously you don't do that. We, or I at least, like to do that as well, the earlier, I think the earlier the better. If we see potential, we like to jump in right away. And an example, yesterday here in Switzerland, I met with a team that has an idea. They already have a company, but they want to create a new idea. So they already demonstrated that they're good business people, and we want to fund the idea from scratch. So it would have to be developed and then launch it. But yeah, those are the most interesting deals. And in my business, if you want to make a lot of money, the only really way is to catch them very early, right? Where you get a lot of equity for the money. So if you get into Snapchat, the first round, even though Snapchat was just a messaging, but whoever took those risks made billions with it. So that's the magic behind venture capital.
Okay. You talked about failures. I think it's very important that you say in Silicon Valley or in the US, failures are easier than in Switzerland. In Switzerland, you lost if you had a failure. Nobody will give you anything anymore. And in Silicon Valley, it's totally different, as you said.
It's completely different, yes. I mean, in the US, they see it as a learning step. So you did a startup, didn't work out. You learned that maybe you were too early to market. You learned that you hired the wrong people. You learn that you shouldn't launch a product that's not working. So those learning experiences you won't do hopefully again the next time. So that's why they think they see a person that did a failure as at the same level as someone that had a big exit. So it's very well seen, and it's respected because anyone that starts a company deserves respect, right? He took a risk. He left everything behind. He probably is in debt. If he has a family, it makes it even worse. So, you need to respect those people and give them another chance.
Is there a difference between Switzerland and the US if you say that the US is more risk-taking in this case? Could it have something about the comfort zone? Generally, you say the magic happens outside of the comfort zone. Is Switzerland maybe too much in the comfort zone? Yes.
I mean, here in Switzerland, they are very, very conservative. Things are changing. I think the younger generation is really trying to take more risks, and those that are too ambitious for the society basically go to Silicon Valley, which is sad, right? Because you lose a brain. But in the US, the risks, there's so much more money there anyway, so taking a risk, losing a few millions here and there is not as bad because there's so much more. But yeah, I mean, like they say, no pain, no gain. So you have to go for it. Yeah.
I mean, it's a little weird to hear that you say in the US there's so much money, and Switzerland is I don't know if I can say this, but de facto financial center. Everybody was pooling money into Switzerland, but there seems to be a lot of money in Switzerland, but not for venture. Why could this be?
Yeah, it's very sad actually. I mean, we just raised a new fund. We're still fundraising, and even though there's so much money here, I mean, everywhere, you would think people would like to take a risk. There is a risk. I mean, we could lose everything, but it's good for the economy. It's good for the younger generation. It's good for all these techno parks to have more investment, more venture capital, and our model is one that hopefully creates some safety nets because we do require the startups to have a bridge to the U.S., right, to raise more money and so on, but. The other thing that really makes me mad is a lot of these U.S. funds come here to raise big money, and they get it, but they take the money back to the U.S. and they invest it in Asia and the USA. So something needs to change here rather quickly. But I'm very happy that I was able to, with my partners, to raise this new fund, all Swiss money. They're all shaking, every day, but they're learning the experience. Yeah.
So now that you're a VC and I would be a startup, how would I get your attention?
Well, I'm a nice guy. So if you send me an email with your summary, I will open it. Most VCs only open those emails that came through a reference, but because in Europe there's not that many references, or they don't know that many people, the young entrepreneurs, you have to open every email. So I open it. By now I know what to look for, if I like the idea or not, and then you have my attention. And then if I like the idea, I will tell you to have a short conversation over Skype, or I send you to my partners in Lausanne.
Venture capital has a little bit of, I don't know how to say it, but everybody says the venture capital guys are the bad guys. What?
Yeah.
Why are they the bad guys? If I'm listening to you, you're actually investing into startups in the earliest phase, in the highest risk phase. Why could anybody have the idea that venture capital is bad?
Yeah, it does happen that venture capitalists sometimes are too greedy, right? And as soon as they smell that the company is not going the direction they were hoping, they can pull the money back. Whatever money is left in the bank, they can pull it and just shut down the company. And these are usually the big funds, right? That they don't want to waste time and money. But for the most part, I think, venture capital, they have to bring returns to their investors, right? That's my job at the end of the day. So we have to do whatever is needed to, without destroying the entrepreneur, bring some returns. But it's not as bad as private equity. Those guys are really, they're really sharks. So venture capitalists it's not that bad, I think. It's not as bad as people think.
But you have to get returns to the investors. If you look at the statistics, if we have 10 startups you invested in, how many of them will go down? Yeah. How many will go up?
So the magic here is to invest in enough startups that you get one Google out of it, or one Facebook or Twitter. Because that one investment will make you so much money that if you lose the other 9, you won't even care. So that's the actual magic. But from 10 investments, 1 becomes a Google, right? Then there's 2 that are very good exits, maybe 10x, 7x. Then you have another 2 where you don't lose your money, right? And then the other ones pretty much you write off. So it's not such a bad, statistics. The problem is those 2 where you don't lose your money and you get the money back, but you don't make too much money. That's perceived as not good in venture world, because you're not returning anything on top of it. So, but the odds are pretty okay, I think.
And to find this new Twitter, new Facebook, you actually have a team to talk to. You have numbers which are wrong. How do you decide?
Well, we go by gut feel, most of it. Then the team is very important, like I said. So the persons that are going to make this happen have to be, convinced that this is a fantastic idea. Now, if you invest in really smart people, they will always find a way to make the company somehow successful, or find a buyer or something. So that's the number one thing. You look at the people. Are they doing this because they need a job? Are they doing this as a weekend project? Or are they really committed? They really believe that this is the next Google, right? No matter good days, bad days. And you feel this when you talk to the person, right? That even if today is a bad day, tomorrow is going to be better, and they're going to stand up and try to make it happen. So this fighting spirit is what you need to look for in the person. Mm-hmm. And then obviously the idea has to be good. The market has to be large. Mm-hmm. You need a large market, otherwise chances are very small. Mm-hmm. So yeah, but again, I would say it's 50% luck, to be honest, right? So.
With your experiences as a venture capitalist, if I can say it this way, do you have any good experience you can share, or any less good experience you can share?
Well, yeah. We have very many good experiences, means all the exits we had. Mm-hmm. It satisfies me when the entrepreneur makes it, right? Because that was his dream. It satisfies me when I invest in a company and I see the product on the shelf somewhere. That's really like, wow, look at this product is in Migros or somewhere or whatever, right? Anywhere. So those are really the great experiences. Making money is a fantastic experience. Employing people is a great experience, right? So those are the good experiences. On the bad side, it hurts obviously to lose a company. It really hurts. I mean, because I'm competitive, I don't like to lose. So that's something I lose. Sometimes, bigger funds invest alongside us, and they really have the say, and they can wash you down, they can take over, they can shut down the company, and you really have nothing to say. And there may have been a chance still for the company, but they can decide whatever they like. So those are the bad days, really. And bad is also because there's limited amount of money, at least in our fund, we're not able to help more than we want to or invest in more companies than we would wish to do. So, and it's not a social cause, but there's a lot of good ideas, a lot of teams that deserve cash and support, but we're too small, so we have to pick. We got to pick, or try to pick the winners.
So if I'm coming to you as a startup and I have the best market in my view for my company, I have a large upside and I'm doing great, I'm sending the pitch deck to you and I do not get funded. Does it mean that my company is bad?
No, it doesn't mean your company is bad. I mean, if you don't get funded by us, it may mean because maybe our guidelines prohibit us to invest in your company, right? But bear in mind, and I have to tell this always to mostly European entrepreneurs, every day we get at least 10 business plans, 10, right? And we are a small fund. The bigger funds get 50, 20, 30 business plans, right? So, and some of them are very good deals, right? Maybe they're advanced but low valuation, or very young, fantastic idea, great team, or maybe a famous serial entrepreneur came in the door. So really your competition is all these other deals we have, right? It could be a fantastic idea, but because I only have 1 million to put somewhere, I need to make a decision. Well, do I put it in this company that has low valuation, a famous entrepreneur, and can make me $1 billion, or shall I put it in your startup, profitable, 5 million, good market, but you're just shooting to $100 million exit or something. I mean, those kind of ideas. So it really depends on what we have on the table at that day. And I can tell you right now we have over 200 deals active on our funnel. So it's very hard, yeah.
Is there something you want to tell the startups I forgot to ask?
Well, I mean, if you have a great idea, and you think there's a market and there's not much competition, you should try to launch the idea. If you really believe in the idea, just go for it. Do not look back. A lot of people are going to tell you, don't do it, especially your wives, your friends, and everybody else, or your husbands. So go for it. Don't be discouraged. Always be two in the startup team. Don't do it yourself. And those are kind of the key points, I think.
So if you would have a choice, who would stand at your position now and answering to my question, who would this person be?
Oh, well, I mean, I would think Elon Musk. It's a great person, right? He has many ideas. I don't compare myself to him at all, but I like to do multiple things at the same time, which most people would tell you, oh, focus, otherwise you're never going to make any of them. And I think Elon Musk has proven that you can do multiple things well, right? You need a good team, obviously, but I admire that multitasking kind of multi-project mentality. You know, there's no reason why you only have to do one thing and do it so well and perfectly when you can do two things 80%. You know.
Oh, perfect. Well, thanks a lot for your insight into the VC scene. Thank you.
You're welcome. Yeah, thank you.
This was Mindcast, the Swiss startup podcast. You find more information and other episodes under www.mindcast.tv.